Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. The spike up to the 260.45 level in February ended the rise seen since August last year, as the market developed a bearish dark cloud cover pattern right at the top of the market. Since then, prices have headed lower, halting briefly at the Fibonacci and other congestion between 227.60 and 229.15, which in reality can be seen as a wide band constructed from the combination of the July and October highs at 217.85 and 218 respectively, plus the 50% Fibonacci line of the big August 2021 to February 2022 move at 217.45, all the way up to the congestion between 227.60 and 229.15. The market eventually made its way down through all this congestion, punching below it 2 weeks ago, but not able to maintain the bearish incentive below it, as we saw a pipe bottom created 2 weeks ago that pushed prices up to the congestion once again, and that's between 227.60 and 229.15. Prices fell there in the middle of last week with two consecutive indecisive spinning tops before dipping down today to test the newly constructed April 2021 today uptrend, currently 213.30. This on its own is not that strong a support. It is what lies just below it that is the strong support, and that is the long moving average, currently 209.10. I previously mentioned in earlier commentaries that avoidance of testing of the rising long moving average was a good enough reason to push the market higher. So we now know what is the congestions above and the supports below. Today, the market has dipped down, but not really tested even the lightweight uptrend. However, things will soon come to a cusp as prices will get squeezed between the overhead resistances as they fall and the supports below as they rise. Indeed, in 2 weeks' time, the uptrend will enter the overhead congestion area. So time is limited, I suspect, before we may see some aggressive action. London coffee. The key difference seen here in London compared to the New York contract is how the peak of the market was back in late December 2021, rather than when New York had it in early February 2022. The difference has been crucial to the formation of two patterns seen here in the London contract compared to New York. We have a November 2021 to February 2022 possible head and shoulders top. Admittedly, the first shoulder is split, but the action nevertheless stacks up as a legitimate pattern. The neckline is currently at 21.39. The market, which had broken down through it 3 weeks ago, proceeded to reject the move lower and break back up through it again last week. The break lower was interesting as the market only got as far as the rising long moving average, currently at 20.91, and just ahead of the thick band of congestion you can see clumped together between 19.45 and 20.04 before stalling and retracing back up to the resistance provided by the August and June highs of 2017, respectively at 21.73 and 21.77. This places at risk the secondary target X at 19.35, as the primary target for the head and shoulders top has already been achieved, which was in the 20.50 area. The secondary target, as you would expect, is always that much harder to achieve. Meanwhile, overhead, we now have the rapidly declining medium moving average, currently 21.79, which, to be honest, I'm not that sure of, as it has been good in the past, but seems just a little too steep right now. But it is partnering with the late December 2021 to-date downtrend, currently at 21.91. So I suspect that this might be significant. What this means is that we have the market now possibly getting squished in between the rising long moving average and a declining medium moving average, and it seems likely to happen just before Easter. Thus, we may well be coming to a cusp in this market as well. Now, it's one to watch, definitely. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.